Now, when you see the hedge funds at a 22-month low on the Mag 7, what the hell are you sitting in these stocks for with profit? Get out. Profits, and that's not financial advice. That's what I would do. Profit's not a four-letter word. And at the same time, when you see none of the talking heads talking about gold and silver at all-time highs in gold, and yet the rush globally to accumulate and repatriate, what are you waiting for? I think something big is coming for gold and silver, bigger than ever before. Don't know what it is, don't know what the catalyst is, don't know how it plays out, but what we are seeing here in the periphery is so far removed from anything that I can even begin to tell you I've seen in 35 years that...
The minimum of the three gains for gold was 80% in 18 months, and for silver, it was 228% in 14 months. That type of performance can repeat itself into 2026, but only if there is a fundamental shift. Gold against the 60/40 portfolio is working on a breakout from a decade-long base, while gold against the stock market is close to breaking out of a 4-year-long base. AndySchectman warns that big money is shifting to risk-off assets while retail investors stay in risk-on trades. While he doesn't know the exact catalyst, Schectman feels strongly that a massive event in the gold and silver markets is approaching. While reflecting on fundamentals, Schectman believes something big is unfolding in the gold and silver markets. He notes that while bullion banks try to control prices, powerful forces like sovereign wealth funds challenge them. The low short position on Comex since 2020 signals a potential market shift. The current stockpile in Comex-registered warehouses now exceeds a previous record set in February 2021, which marked the peak of a buildup of inventories sparked by the market fallout of the pandemic. As far as markets are concerned, Schectman highlights the LBMA's 8-week delay on gold deliveries, raising concerns about potential market disruption. Notably, Schectman observes early signs of rising demand in the precious metals market. Premiums are increasing, availability is tightening, and large orders, like 11,000 ounces of numismatic coins, are selling quickly, signaling that savvy investors are catching on. North American demand surged in February, adding $6.8 billion. This was the largest single-month inflow for the region since July 2020, and the strongest February ever. As physical shipments into Comex vaults from London and other markets made headlines, the positive gold market momentum benefited North American gold ETFs. Now, we present the clips of AndySchectman's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
But I will tell you that in my entire career, Dunnigan, it has never felt like it does right now. Something's brewing with gold and silver, big, and you can see they're fighting it. They're not letting it easily get away from them. But there are forces that are not bullion banks that are challenging the bullion banks, standing for delivery. And these proxies, whoever they are, these sovereign wealth funds, are a formidable foe, to say the least. And I think to be naked short right now is insane. And maybe that's why you see the short position on Comex the lowest it's been since 2020. And maybe will continue to go lower. And maybe that's part of the reason we're seeing the gold come back. But if you are naked short and you need to deliver and the LBMA says, sorry, 8 weeks, what do? Where do you get the gold? This is how the whole thing can blow up. A lot of people think it won't, that the exchange will do something that they need to do to save themselves. But what if it happens in the LBMA? Are they doing that to save themselves right now? 8 weeks, cooling off? If you had millions of dollars worth of gold that you were expecting for something, whether it be to cover a position or manufacturing jewelry or whatever it is, and you were told, sorry, it's 2 months minimum before you get it because we don't have enough trucks and enough manpower, which is a joke. So I don't know. It's bigger than what a lot of even the people in this industry who kind of lean to the conservative side, not as stupid as I am to say these things, maybe foolish, but I feel it. That's why I keep saying I don't know how it all plays out, but it doesn't feel just like a normal arbitrage or a normal Trump tariff maneuver or even the Basel III thing. It just seems a lot deeper than that. I guess only time will tell. But, as far as retail, we've seen it begin to pick up. We've seen premiums start to slowly rise, availability start to slowly wane, slowly. Because for the last year, it's been the opposite of that. Premiums have been falling, availability has been increasing. Our inventory was never been so deep, but it's beginning to change. And we've seen some very large orders lately. We sold 11,000 ounces, we and you, of numismatic coins. And I will say to all of the people who took advantage of that, I have never seen a better opportunity. And you look at any of the other retailers out there, those of you that got the 63s and 4s and stuff, you'll see exactly what I mean. The prices are way higher than what you paid. And we sold it in a matter of days. So there are people who are beginning to understand what's happening in a very significant way. But I would argue, and give a name to this podcast, the big money is moving from risk on to risk off. At the same time, the public is deeply entrenched in the risk on trade. That, my friend, is something that I would not want to be part of because, as we've said before, the little man always is the last to learn. The big guys not only know the playbook, the information, but they position themselves. Now, when you see the hedge funds at a 22-month low on the Mag 7, what the hell are you sitting in these stocks for with profit? Get out. Profits, and that's not financial advice. That's what I would do. Profit's not a 4-letter word. And at the same time, when you see none of the talking heads talking about gold and silver at all-time highs in gold, and yet the rush globally to accumulate and repatriate, what are you waiting for? I think something big is coming for gold and silver, bigger than ever before. Don't know what it is, don't know what the catalyst is, don't know how it plays out, but what we are seeing here in the periphery is so far removed from anything that I can even begin to tell you I've seen in 35 years that I would bet that we're all surprised how it all plays out somewhere this year, what the final numbers look like, where it ultimately goes, and who the players are that are involved in it. So
in the interview, AndySchectman suggests a broader agenda beyond profit may drive silver's price suppression. He questions why 8 Western banks hold the largest concentrated short position on Comex, trading far more silver than the annual global supply. Schectman believes silver's industrial, monetary, and military importance makes it a target for manipulation by powerful forces. If the banks want to pull the rug out from under silver, it will be a lot easier for them to do so since the silver market is much smaller than that in gold, which is not a huge market by any stretch of the imagination. Adjusting silver's price for inflation further highlights how undervalued it is by historical standards. During the Hunt brothers-induced spike in 1980, silver reached an inflation-adjusted price of $196. In the 2011 bull market, driven by quantitative easing, it hit $71. Currently trading at just $32.69, silver has significant room to rise to catch up with these previous inflation-adjusted peaks. Let's get back to the interview.
even though it's a monetary metal, gold is the monetary metal. Gold is the tier one asset. And, you know, you can see by the central bank accumulation of silver that they have not forgotten about it, but it will not back a system. It will not be a bimetallic system, but silver is strategic. And I think silver has not kept pace with gold because silver is a far more important metal to the military-industrial complex. There is a bigger agenda with silver. So gold is the monetary metal, and silver is too. But silver, its plurality in demand is what sets silver apart from a value proposition. You have monetary demand, you have industrial demand, you have military-industrial complex demand. And by now, if we can't tell how powerful these folks are, you know, the pushback for peace is ridiculous. The warmongering, the continuing, you know, they want NATO now. You want NATO to put boots on the ground, the UK and France in the Ukraine. Are you really that stupid? I mean, these folks just want perpetual war. Well, if that's really what you want and you want to continue to make weaponry, you need cheap silver. And if the world really knew how valuable silver was and how scarce it was, it would be a whole different value proposition. Some of the countries do. India, I would argue, does. And that's why they've imported, I don't know, I don't really know the number, north of 800, 900 million. And why would they do that if it was just a, you know, why is China, who's the second largest producer of silver in the world, going around buying doré and concentrate if they're already producing it there? from the miners in Peru and the rest of Latin America, disintermediating the marketplace. Why is Russia adding it? Why is Russia adding it to their strategic stockpile? These are all questions that they don't need to be answered. They need to be asked. And it's easy if you look at that and say, well, geez, what's Occam's razor? Occam's razor say because it's a whole hell of a lot more important than the price would lend one to believe. So I would not. I understand people being discouraged by it. It's been counterintuitive, but the bigger question is why? Why has there been such a massive effort by these massive banks to mess with silver? If you look at that chart that you put up during your interview with Ed Steer, oil is down at the bottom in terms of short, and silver's way up here. It is the largest concentrated short position by a handful, 8 Western banks. Well, I guarantee you those same 8 banks have been doing the same thing in the LBMA, where they have a 300 million ounce float and trade 3 billion ounces a day. 10 times the float, 90+% naked. And that's the answer that I would give, is that it's been manipulated, not for gain. Maybe the bullion banks that mess with it figure, well, we're being told to do this, but we can make some money at the same time, but more so because the military-industrial complex has been running this country as President Biden was sitting on a beach. It wasn't him making the decisions to all the things that we were doing, he didn't have part of, but the military-industrial complex, I argue, did. And the billions and billions and billions in military aid we gave to the Ukraine. And it's very interesting. If you look at who owns all of the military companies, like Raytheon and General Dynamics and Boeing, and who do you think owns all that? Oh, that's BlackRock. And who do you think got all the contracts to rebuild the Ukraine, where all the money will be made? Well, guess what? That's BlackRock. And who do you think is now the primary custodian of SLV and GLD along with JP Morgan? Oh, that's BlackRock. So it's a whole lot deeper than people think, but these massive behemoth institutions have crossed the line from, being a corporate entity into, becoming more government than anything else. In my mind, that's why silver has been held back. But you could argue that there is a realization by countries and very powerful countries that aren't afraid to stand up to the Comex. They aren't afraid to stand up to the LBMA or to the West for that matter. They understand what we've been doing and they're beating us at our own game. It will happen. It will happen in a glorious, spectacular fashion. It will test your patience. But when it snaps, it will snap in a way that you finally will understand why you had such strong fingertips, that your intuition led you in the right direction.
While part of gold's strong price performance could be attributed to momentum, World Gold Council analysis suggests that flight-to-quality flows have supported it amid increased financial market volatility driven by geoeconomic and geopolitical concerns. Against the background of growing economic risks, falling dollar, gold has all chances to continue its growth after the change of local trend. Do you believe a major shift in the gold and silver markets is imminent? And if so, what catalyst do you think could trigger it? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.